Welcome traders to another tick mill trading update with me, Patrick Manley. I want to update the S&P 500 view using the mini futures contract and put together a trade plan for the trading session ahead. Before we jump into the charts, on the macro side of things, we have annual payrolls revision out this afternoon. We pay attention to that. Any meaningful revisions may rattle the soft landing story or the soft landing narrative that's currently in play. And then later today, we have the FOMC meeting minutes. I'm anticipating more muted reaction to those, especially as we have Fed Chair Powell speaking on Friday. So moving into the charts, on the weekly time frame, just want to highlight a time and price window that I'm tracking. This September 9th through to September the 16th is a time window. The 9th coincides with a seasonal pattern in terms of election year cycles when the market tends to top out ahead of the election and we see a bit more volatility with a downward drift into late October or into the elections itself before cash gets redeployed. I've posted the Goldman note with respect to tactical fund flows in the futures Tickmill futures Facebook groups. You can review that in your own time to assess the details. And then we have that's 16th, so the second half of September historically are the worst 2-week periods for equity markets going back to the 1950s. So that's a time window I'm tracking and a price level just shy of 5,900, which is the 127 extension here on the daily time frame of the correction we saw. So I'm looking for a 5-wave sequence into that area, late 5800s, ideally on that time scale into the second week of September, and we'll see if that sets up for a potential certainly tradable local high in place for a few weeks then as we get closer to the elections. So moving to today, so just keep those mark those up on your charts, the price levels and the time zones there, just to keep those front and center. Moving to today's setup, you can see my positions. So shorted the 35 now. Move my stops to entry on that, and got long against the 56.15 yesterday, as highlighted in yesterday's plan. That also is now for me a risk-free position, and so the weekly plan is playing out somewhat at this stage as we hold this resistance zone. Moving to today's setup and the intraday levels that I'm tracking. So today's bull bear zone for me is going to be this 5604 down to the 5593, which is the low volume node for the 5-day profile here. So any pullbacks into that area, I've been watching for bullish reversal patterns to engage on the long side. Upside objective remains the 5660s to 5670s, and that's the target zone on the upside. A range extension today would be the 5702 to 5712, and again from there I'll be watching for any bearish reversal patterns or intraday divergences to play from the short side, certainly targeting at least a 20-point pullback would be my initial objective anyway on that type of setup. If we break the bull bear zone to the downside, my next area of interest is going to be 5570s to 5560. Again, watching for intraday divergences, or you can do a set and forget here and look to target a move back up to test the bull bear zone from below would be the first upside objective, and then you can look to manage the trade higher up to our target zone if it sets up. Any loss of the 5560s would be a short trigger down into the range extension zone to the downside, which is 5539 to 5529, and again there I'd be watching for bullish reversal patterns or intraday divergences to trade for a profit-taking move back up to retest the value area low here on the 5-day profile at 55.60s. So that wraps things up for me today. As always, traders, plan the trade the plan, and most importantly, manage your risk. Until next time, thanks very much.